Thank you, Tom, for that introduction, for warming up the crowd. And also thank you to all of you for being here today to join us for this conversation. So it feels like I should be starting this panel by quoting Dickens, you know, it was the best of times, it was the worst of times. We are truly living in a volatile and fragile world, and this is no less true within the boundaries of Web3. And anyone who's been following the FTX saga over the last few, well, literal 24, 48 hours news cycle, and the sagas that have preceded that over the course of this year and beyond will know that this is true. But if you were here for like a blow-by-blow FTX takedown or like a live ticker of what the actual Bitcoin price is right now, this is not the panel for you. We are not going to go anywhere near those topics. What we really wanted to talk about was that, you know, these issues provide an even more pertinent backdrop to what this wonderful group of humans will be discussing today. Because the reality is that collecting, trading, and exchanging forms of currency are human behaviors as old as civilization itself. But they've taken on a distinctly different feeling in the world of Web3, digital goods, and of course the metaverse. So beyond the world of cryptocurrencies and pure DeFi, the question remains, how can we determine the value of an intangible asset? Is beauty in the eye of the beholder? Or does the concept of this true price dominate? Are Web3 collectors and traders seeking status, riches, belonging, or both, all of the above? So I'm really excited to welcome our all-star cast of industry leaders today, joining me to explore this topic. Please welcome Stefan von Imhof, CEO of Alts, where he lives and breathes asset analysis and valuation, and oxygen, I hope also. We have Daniel Bertram, the co-founder and CEO of Rarity Punks, a company building solutions for the future of NFTs. And finally, we have Megha Tripathi, NFT investor, community moderator, and project manager, who's working on projects such as Rebel Society, Brown Baddies, and Wow Pixies, for those of you familiar with those projects. I couldn't imagine a better group of humans to assemble as we seek an answer to this question, what is rare? So, to kick things off, let's actually get to know each other a little better. I'd love to ask each of you what the most valuable thing you actually own is and why. And Stefan, I'm going to go straight to you first.
The most valuable thing I own is probably my Beatles records. No, I'm just kidding. I think the most valuable thing I have is my health. It's not something I've always had, and it's not something I take for granted, but it's definitely the most valuable thing I have. That's kind of on the intangible side. On the tangible side, I actually have the most valuable thing I own on me right now. Would you like to see it?
I absolutely would.
Okay. It's this right here. I don't know if you guys can see, but this is my Medicare card. And this is what helped give me the confidence to start a startup here in Australia. I think we should feel lucky, us here in Australia, that have this. I think it's, you know, not everyone has this, not every country has this, but I think it's one of the most valuable things I own. And I think it's, you know, one of the reasons that people should have the confidence to start a startup right here in Australia.
Love that message. Thank you, Stefan.
And the coffee, too.
And the coffee. Absolutely. Daniel, what about you? What's the most valuable thing in your wallet, bookcase, heart?
Yeah, it's a difficult question. I've thought about it a lot, and I thought, like, well, you know, family, friends, but like, do you really own them? And then my cats, like, I guess I own cats, or do they own me? I'm not quite sure. But in my bookcase, I have a very large CD collection that I've been curating over the years. And I know CDs aren't very cool, but
so retro.
You know, I was born in the 80s, and you know, CDs were a thing in the 90s. And I guess, like, I do really value that, because that's a representation of me and what I like, and it helps me, you know, remember the times, you know, when I see them. It's a really great way for me to look back, and yeah, I value that a lot. And you know, I don't know, Spotify just doesn't do that for me. But I'm looking forward to a future where I can buy NFTs of my favorite bands that I really love and proudly display them in my wallet. And
surely nostalgic playlists will become a thing in Spotify too. Who knows?
Yeah,
well, created in. Who knows?
The problem is you can't.
What's the top CD on the pile at the moment?
Ooh,
too nervous to tell us?
No. There's so many CDs on the pile. Okay. It's just like, what did I bought the Opeth Blackwater Park reissue the other week. It's 20 years since it was originally released.
Cool. Yeah. All right. Nice one. And Megha, what about you? What's the most valuable thing you own?
If you asked me 12 months ago, I would have probably said my NFT collection. But although I don't own my family, I think the most valuable thing to me is my family.
Yeah,
So,
nice.
Yeah.
Awesome. So I am going to hopefully get a chance to allow you all to ask some questions of our panel today. So please jump onto the Slido, use the hashtag Sunrise if you do have any questions as we progress through this conversation, but I'll keep things moving for now. So trading, collecting mechanisms that we're using right now are new. You know, the assets being coveted are also new. We weren't after digital kind of representations of images. We weren't after, you know, these kind of intangible currencies not so long ago. But the behaviors themselves are as old as time. What is actually different this time around with Web3? What actually makes this a fundamentally big shift in our behavior? Maybe, Daniel, do you want to start from your perspective?
Yeah, I think, well, one thing is, I guess there's a layer of, well, it's digitized, it's easy to access, everyone has the internet. I mean, I know the user experience isn't great, but you know, it's a way, I guess, to connect more directly with people that are creating great things. And you know, it's really, in a way, it's like a way to back a startup that doesn't have to go through the normal process and gatekeepers. Like, you can connect directly with your believers, and you know, whether you're a creative or a tech company, you can tell people what you're about, and people can get on board with that and give you funding and hope that you do something.
Yeah. So a way to show support or kind of fund new and cool things to happen.
Yeah,
Yeah,
that's really cool.
Stefan, I see you nodding. Do you have a similar thought or something to add?
I think one thing that's different this time around is the real-time feedback, the real-time nature of these marketplaces. So, I mean, if you think about it, it really wasn't that long ago that people bought houses without really knowing what they were worth, you know, or knowing what their neighbor's house would be worth. So that's changed a lot. We have that, you know, liberation of data. That's certainly with us today. But I think what Web3 brings is that real-time data. So a good example of this would be, you know, there's a lot of companies now that are tokenizing real estate. So they're buying real estate and they're fractionalizing it and they're tokenizing those fractions. And so that's like a whole other level of price discovery and transparency that we've never had before. It's pretty fascinating.
And are you ultimately optimistic about like where these trends are going?
Yes, but I think that when you have real-time feedback on stuff that maybe doesn't deserve it, it can create all sorts of negative externalities, you know, FOMO and other, you know, I mean, we all know.
Yeah.
You know, so, but I think that the younger generation kind of grows up inherently knowing that and is more kind of maybe okay with it than older generations. We hope.
It feels like we're still in a kind of signal versus noise stage of this ecosystem as well. Like, what are those things that really matter and what should we be paying attention to rather than over-indexing on every data point that we can see in real time?
There's a lot of noise right now, and it's tough to sift through it.
A lot of noise. So Megha, you're working across a range of Web3 projects. I'd love to understand your journey into Web3. Obviously, we are all in something that's a very new landscape. You know, we're talking 1 year, 2 years max. How did you actually end up there, and what determined the projects you ended up getting involved in?
Yeah, so I actually got into NFTs late last year. So actually, I'd quit my job, just wanted to take a career break, and my background's actually in HR. And basically, I was told, you know, why don't you just, you know, use your spare time, why don't you look into NFTs? I just kind of started reading about them. The first NFT that I bought was pretty much a scam. I didn't do any research. But then shortly after, I realized that there was this community of women and female artists and basically women supporting other women in this space. And at that point, I realized this is where I want to be. This is where I feel like I belong. And that's when I realized I just wanted to invest in NFT projects led by women and also contribute to those projects. So what I did was just put my hand up to contribute by moderating on Discord. Like before this, I didn't even know what Discord was. So it was, you know, really great exposure for me to learn everything about like Web3 and NFTs and just like reading about what NFTs are, what smart contracts are. And then shortly after, I just realized, okay, this is what I want to do and invest. I've invested in a lot of NFTs, but also started contributing to other communities like WowPixie's DAO, which is a DAO, which is a decentralized autonomous organization, as well as other communities focused on supporting women in Web3 careers, which is X Collective, where I'm kind of actually applying my HR experience and doing a Web3 compensation survey, so running that at the moment. So
does Megha today look back at Megha a year ago and go, wow, I did not expect to end up here?
Yeah, yeah, definitely.
That's awesome. So Daniel, Rarity Punks was initially conceived to better evaluate the rarity of individual assets or individual kind of NFTs within a larger collection. How did you initially come about that concept of calculating the rarity? And we'll sort of talk about where that's evolved to after that. But if you can start there, that would be great.
Yeah, sure. Yeah, so I guess got into NFTs over a year ago and initially looked at OpenSea and just saw people paying too much money for JPEGs, thought it was kind of stupid, and
Prescient.
and yeah, it's still kind of but yeah, started going deeper and looking at like, oh, why are people paying more for certain NFTs? Like, what's going on? And came across this site at Rarity Tools, which was really like the first site that had a rarity algorithm. But the problem there is like Rarity wasn't really democratized. Like, you had to pay Rarity Tools to Ethereum, which was a lot at the time. I mean, now it's, but you had to pay Rarity Tools, and even then they were taking weeks to come back with the rarity for the project. So in those early stages, there was a lot of speculation on whether something was going to be rare, but you didn't know until Rarity Tools posted what they had. And we were getting right into the trading, and we, I guess, reverse engineered their algorithm, and pretty much we published a white paper. It was like, this is the algorithm, like this is how people can rank rares. And so, yeah, we were ranking rares, and pretty much we were ranking them faster than anyone else. So we would just buy the rare ones and then flip them for profit, and that's really how we started the business. But we bootstrapped ourselves flipping NFTs. But in doing that, we saw there's so much more opportunity, and NFTs have some really interesting use cases, and there's so much potential, and like we're excited about where it's heading. So yeah, I guess we moved beyond that, and yeah.
Before we go on to where you're sort of heading now, I guess this idea that it was an objective view of rarity, the framework that Rarity Tools had developed, and that you ended up kind of reverse engineering. Do you look at that and think, yes, that fundamentally was objective, or was there this subjective layer around rarity that actually has been baked into everything that has gone on since?
Yeah, it's interesting. It depends. Like, rarity is one lens to look at things, and like that rarity algorithm is one lens to look at things.
Yep.
Like ultimately people are going to value what they value,
yep.
but people were, I guess, looking for a way to objectively value when there's a collection of 10,000 NFTs, yep. like which ones are better. And yep. obviously some look better, and usually there's a correlation between rarity and aesthetics and then value, yep. but that's not always true. And NFTs also allowed for calculation of rarity because they have metadata attached to them, which sets out all the attributes that the image has, and because they were usually generatively created. Yep. You can then algorithmically rank them yep. based on those attributes. But not all attributes are created equal. Like, some collections have attributes like a diamond nose stud that's really rare, but it's just like 4 pixels. And like, does anyone actually care if it's got a diamond nose stud, even though it might make it the rarest in the collection? Yeah. So I think there is still like an element of people realize like, yeah, it's rare, but I don't really like it.
Yeah. Yeah, and I found, like, especially in some of those, the high-profile 10K collections, the ugliest ones were usually the most rare, and I was like, yeah, no.
Yeah, that's right, because there's this like meta trait called trait count that Rarity Tools popularized, right. and depending on how many traits it had, yeah. it gives it some points. And yeah. the ones that have tons of traits often look like a disaster because yeah. it's just stuff slapped together. And,
I prefer Chanel's advice. Put it all on and then take one thing off. I think that's the better way to go. So now let's get to where you are with Rarity Punks now. How has that whole experience and seeing the evolution in the market and what people value, how has that changed your approach to building? What did you believe at the start to be true that has kind of fundamentally shifted in your assumptions?
Yeah, so, well, in the beginning, we were seeing a lot of people excited to get into the space and a lot of creation happening. There's still a lot of creation happening. And I guess in the beginning, we were saying like, well, we want to, like, there's a lot of creation happening. People are putting a lot of effort into things, and then they're launching these projects only to mess up their metadata or mess up their smart contract and then fall flat, and the whole thing tanks, and everyone that believed in them loses their money, and it's a whole disaster. So, we really wanted to help with that creation process and make that easily and higher quality. And we still want to do that, but now creation isn't as much of a problem. There's a lot of tools for creating, and there's like too much creation. And I guess, as mentioned earlier, signal versus noise. Yeah. There's a lot of noise and not a lot of signal. So, what we're focusing on now is, well, we did build some like quality assurance tools for NFTs, which we do plan on launching. But we're building essentially a search engine for NFTs that, like my background's cybersecurity, and bring that into it and building a layer of trust so you can search for things and get the results you're expecting, rather than, I don't know, I search on OpenSea at the moment and I get all these rip-off collections. It's
Makes sense.
hard to navigate.
It's fascinating, and I think it's really needed in this space, so it's exciting. Stefan, you now spend your time charting collectibles, both tangible and non-tangible assets, through your work with alts. What did you see that was broken in the world of collectibles trading, and how does alts actually fix this, just kind of before we dive into the Web3 bit of it all?
So there's a confluence of factors that have led to entirely new investable markets that didn't exist before. All of a sudden, people can invest in wine, in whiskey, in real estate, music rights, farmland, the list goes on. And this is really cool. This is exciting. But the problem that we were trying to solve is that everyone started to invest emotionally in this stuff, right? Because it is pretty fun and cool to be able to invest in a meteorite or dinosaur bones. But how do you know if it's a good deal? So it turns out you actually can do the hard work, and that's to figure out what the value is, and that's exactly what we started doing. We started doing that hard work that no one else was doing. So looking at the meteorite market, understanding what drives value, how value is derived, and basically trying to take the emotion out of investing and apply a qualitative and quantitative analysis to the best of our ability to these new esoteric markets that there's not a lot of price history, there's not a lot of price discovery. You just got to get in there, get into the weeds, and do the homework that no one else wants to do. So that's kind of our role.
And so within the kind of microcosm of collectibles that are Web3 specific, how do you see yourselves playing that role? What are the things you can learn from the physical assets, collections, like all of that, the price discovery, all that stuff that you just mentioned? Is there transferable kind of skills in that, or are you applying a very different lens to the work you're doing in the Web3 side of things?
Look, Web3 is a part of what we do. It's not a huge part, truly, but it's a part. I think there's a lot of new digital assets online that are deserving of attention and understanding these markets. NFTs is one example, crypto derivatives, metaverse land. It's a lot of people probably laugh at some of this stuff, but there's markets there. There's markets in everything, and so the principles are kind of the same. You try to understand where the scarcity lies, if it exists at all. If you try to understand who the buyers are, who the sellers are, how the markets operate, how much liquidity is in the markets. It's really not a whole lot different. It's tough for people to wrap their head around, I think. The Web3 collectibles, but it's really not all that different.
So I want to touch on, I guess, motivation, because that's really what's seen the huge rise in popularity of Web3, of the kind of non-fungible assets, metaverse. What are people really seeking when they're getting into this world of non-tangible assets? What's the end game that they imagine for themselves? Do you have a sense of that, Stefan?
I think there's a little bit of everything. There's a little bit of FOMO, I think.
Yeah.
There's a little bit of status seeking. We are status seeking monkeys after all. But I think that there's a lot of things kind of that coalesce into what drives demand. Yeah. I don't pretend to have all the answers on this stuff. We're kind of learning as we go and teaching others what we know. Someone else may have a better answer than that.
Well, Megha, I was going to come to you after that, just in terms of the collections you've been involved in yourself, what you've seen in the projects more broadly. What kinds of motivations are you seeing at that more granular level? Why are people attaching themselves to different projects? Why do some projects fail, some projects succeed? Love you to talk about that.
Yeah, so the key thing I've seen is that sense of belonging, that sense of community. So a lot of the projects out there are actually quite niche, in terms of interests in different topics. It could be you're passionate about a certain type of art or particular types of music, for example, or even I'm a woman and I'm passionate about empowering other female artists. So I feel like that's like a key element of it all. And I think that's part of the success as well for those NFT projects, that people in those communities are actually interested in one particular topic, and that's what they're talking about within those Discord chats, for example, or those Twitter spaces as well.
And have you seen things resonate less? Like, you've been in communities that have been super successful or have had like a really core community. What does it look like for something that perhaps has not got that same gravity?
Yeah, I feel like I've seen that a lot more in this current market in the last 12 months. So I think more recently, if the community is not very active or not very engaging, or like the founders, for example, aren't engaging the community, very quickly it just dies down. And I think it's that, the particular interest that people are passionate about, that's what keeps them really engaged. Like they might not even be adding that much utility necessarily in some NFT projects, but the utility is actually just that sense of belonging and being part of something.
I think that utility point is really key as well, because we're looking for more than just membership by virtue of the NFT. We're looking for some kind of real world application for what we're buying into in this community. How do you think about weighing utility into your thinking around Rarity Punks?
Yeah, I think utility is becoming more and more obvious, and also I think it's critical. Like art is one use case, but I think it's a pretty boring use case.
Yeah.
I mean, it's got value, but
The entry point.
yeah, it's the entry point. And I think what a lot of people investing in NFT projects are really investing in innovation, and the utility is the output of that. And people are still trying to work out though how to bring a return to their investors through building that. But you're seeing so much creativity, and there's so much money poured in. Better utility is coming, and I think it's like that. And what we're doing is now, I guess we're going way beyond rarity, and we really want to help people understand that utility angle, and how do you weigh and measure and value that.
Yeah. Do you think there's a key application that that is the best first use case for that real world utility? We've kind of gone to the world of merch and the world of parties. That's not real utility. Is there something that's kind of coming down the horizon that you think will be the killer use case?
Yeah, I mean, there's lots, but
or we do all like merch. Maybe merch is.
Yeah, I mean, merch. Starbucks is using it for their loyalty program.
Yeah.
Ticketing seems like an obvious one. But I mean, I love gaming, so I think gaming utility. Why not have your gaming assets, interoperable with other markets, and being able to trade them freely, and you can exit the game if you wish, and someone can benefit from that labor.
Yeah.
I'd echo some of Megha's comments. I think utility is really important, but I think that tribalism, you're kind of alluding to that a little bit, is definitely a running theme right now. Digital tribalism, as we move to our digital identities online. And I just think of myself, my Twitter profile picture is from an NFT collection called Drop Bears. And it's not the world's most valuable collection. It's it's not that expensive. But the reason I picked that one is because it stands for two things that I really care about. So number one, it's Australia, and number two is cuddly, cute koalas, and they give thousands of dollars to koala rescue in the wake of the bushfires. And so, I think that's a tribe that I can get behind, and I think that plays into things as well.
So when you think about what do you think we've been trying to solve for here with the creation of these kind of alternative markets or non-fungible assets, the kind of world-building aspect that we're seeing through Metaverse and other NFT projects? Is there a solution that we've been looking for, or is this pure experimentation?
A lot of experimentation, but I think it comes down to access, right? I think one of the big themes right now is fractionalization, right? So the idea of instead of buying property for $1 million, you buy 100 shares for $100 each. That's huge. That allows people to get access to a new asset class that they would not have been able to get before. I mean, what's the median home price in Sydney? $1.5 million, right? What's the biggest blocker to getting on the property ladder? You need 20% down payment. That's $300,000, $500,000. Why should homeownership be only for the people that have that cash lying around or have that cash in their family? So I think the fractionalization is a huge theme, and I think it really is an important theme for humanity. It opens up access, not just in real estate, but all sorts of new markets.
I think the access point also speaks to your experience, Megha, in finding projects accessible to even get involved in as well. And one of the things you've been working on, we're at the formative stages of what it looks like to work in Web3, to kind of leave your traditional job and move full-time into some kind of portfolio career in this space. So how people's compensations are structured based on their varying levels of engagement has been like a Pandora's box. So tell us a bit more about the work you've been doing in this space and how your kind of original, not even Web 1, but traditional background has come into play.
Yeah, so my background in HR is actually specialized in compensation and benefits. So when I saw this community called X Collective, basically the purpose of the community is to support women's careers in Web3, and actually that's actually the utility. So if you own the NFT, you get access to CV review support, for example, or access to compensation data. So the project that I'm working on right now is basically we're doing a Web3 compensation survey and collecting data from everyone, not just women, men and women, across the Web3 landscape. So it could be, you're a casual community moderator or actually a professional working in a Web3 organization. And by collecting that data, we really want to basically share that data back to the Web3 community so they can actually have conversations around pay transparency and be confident with the conversations that they're having. But right now we're just collecting the data, but what I've seen so far is that people get paid in really different ways, and it's actually really challenging to even determine how organizations in Web3 pay people. So it could be as a percentage of mint or percentage of royalties, or as their compensation is a NFT or in crypto. So that's actually one of the biggest challenges. And I think, we're still very early stages, but I think this is a good starting point for us to kind of share that information back.
I think it's fantastic, and that kind of visibility of how to structure things is really key. Do you think this is going to have a knock-on effect back in the other direction as people have portfolio careers or start thinking about their own work? Maybe they do have a traditional job plus a Web3 career. Are we going to start to see the compensation structures that are more prevalent in Web3 coming back in the other direction, or is this very kind of specific to the non-fungible world?
Yeah, that's a really good question. I think there's an opportunity for NFTs or other things in Web3 to actually be part of a compensation package, not just for Web3 organizations, or even part of employee benefits programs and recognition. So, you can even think about a recognition sort of token and then adding particular utilities or benefits to that for any employee in any organization. So I think there's lots of opportunities out there. I don't know if they've been thought about. I'm sure some people are thinking about it, but yeah.
Because that then speaks to things like ownership, and these are the kinds of values that the next generation of employees really care about. They want a seat at the table, or that real kind of skin in the game, and that's what this kind of represents, I think, as well. It's fascinating. So it's no news to anyone that we've entered a bit of a bear market as it relates to crypto, Web3, intangible assets, property, the stock market. I mean, the list goes on. We're in a bear. But Stefan, have there been similar kind of booms and busts in collectibles that have more of that tangible value, whether it be the vinyls, they've come in and out of favor, trading cards? What have we seen over history with those kind of more tangible collectible assets?
Oh, sure. I mean, people always ask me how are alternatives doing? Because, equities are in the toilet. And I was like, well, it's a bunch of different asset classes. Which one are you talking about, right? I mean, there's dozens. So all markets are different, and many are uncorrelated both to equities and to each other. But yeah, we've definitely been through boom and bust periods within each individual alternative investment market. I mean, a good example is the video game crash of 1983. I don't know if anyone knows about this, but the one funny anecdote from this time was Atari had made so many copies of a game, E.T. game, that they couldn't sell, that rather than try and sell them, they literally just shipped them all to the middle of the desert and put them in a landfill. And people thought this was the end of video games, but of course it came back. We're seeing some bifurcation in some of the other alternative markets. So sports cards, the high end is doing really well, but the low end isn't doing quite as well. And some markets are just plugging along like nothing happened. I mean, wine is a great example. Wine is a terrific alternative asset, and its performance against the S&P it's beating the S&P over the last 6 months. It's not even close. But my favorite is vinyl records. And the vinyl revival is real. This is not just like a Melbourne hipster saying this. This is actually happening. We have the data. We actually create the data. We've created the world's first high-end vinyl index. So we're going out and we're tracking the price of high-end vinyl records at auctions. And we know who the best artists are to buy. And this is for our own fund, but also for the community to help them learn how to invest in this stuff. So yeah, I mean, vinyl holds its value extremely well. The best time to buy was probably in the early 2000s when no one cared and no one wanted it. But it's holding its value very well. So
do you think
go vinyl.
Do you think Daniel's ahead of the curve holding onto his CDs?
Actually, I am so glad. I am so glad you said that. There's a couple people saying exactly that, because mathematically, CDs and vinyl have the exact same fidelity, but CDs last longer. They don't scratch. They're smaller, they're easier to ship, they don't degrade. So there's a lot of people, and CDs are cheap right now, guys. So laugh all you want, but this may be a very good time. Buy CDs now and thank me in 20 years.
That's awesome. So Daniel, what have you learned through the bear market about what matters to people when they're buying collections? Like what things have risen in popularity, what have held their value? What are you seeing from that perspective?
Yeah, I mean, people are really shifting a lot more towards fundamentals, like hype marketing doesn't take you so far anymore. Celebrities and influencers like shilling NFT projects, it just doesn't work.
Yeah.
I guess people are still learning what fundamentals means in NFTs, but people are now, like it seems normal now to have a pitch deck with your NFT project or a white paper, and people are like, oh, this is amazing, it's got a pitch deck. But I'm reading some of the pitch decks and it's like, what's the problem? People, don't understand the difference between Web 2 and Web 3. What's the solution? We're going to be the people that understand the solution. I'm like,
Take my money.
That's not a solution. Yeah, so it's finding its way there. But I think people that are innovating and creating real value, if you're shipping stuff and executing, like that's where people are valuing it. People can see you're shipping stuff. But you can't just ship anything. There's a lot of NFT projects that started a year ago that said they were going to make a game, and they made a game, and it's just a terrible game. Like, no one wants to play that game. And I think it's the same for a lot of this metaverse land. Like, there's a metaverse worth a lot of money, and who wants to be there? Like, it looks like Minecraft, and no one really wants to hang out in Minecraft with their friends.
You can live next to Snoop Dogg. What's the problem?
Exactly. Live next to virtual Snoop Dogg, and I don't know what you.
So I'm going to jump to a question from the audience. Otherwise, I'm going to be too greedy. So the question here from Anonymous, thank you, Anonymous. Many would argue that the onset of NFTs was initially grounded in greater fool schemes. With the recent downturn, do you think this has changed? I'm asking this because I think it further leverages that point. Like, has the behavior changed? Can you get away with a lot less now? What are we going to see with the kind of new projects that are launching from kind of 2023 onwards? I'll stick with you, Daniel, for now.
Okay.
Sorry.
Sorry. Yeah, I think absolutely. I think it's changing a lot. Like, I think people now are looking for some kind of trust or verification of like who's creating this project, what's their background, who are their investors. Like, they really want some confidence that this isn't just another empty promise. And I think that people aren't investing for hype. People are investing for what the outcome is. And I think it's an interesting problem to try and solve. Like, how do you get a return from an NFT, like a return for your people who mint your NFT project? Because you get all the money up front, and then people are just trusting that you'll do something with it that will somehow create value ongoing for you, so you can stay in business, but also somehow create value for them. So it's a interesting business model I think people are yet to solve. But
And Megha, with the projects that you've been involved in to date, or things you might continue to be involved in, and perhaps even something like Wow Pixies, which is more of a DAO structure, how do these fundamentals, or have they been operating in the right way the whole time, and this is going to be the kind of project we start to see more of? How do you think about that?
Yeah, so I think in terms of just that structure of NFT projects, so one thing I've seen nowadays is that they're already adding value before they even launch the NFT project. And I think that's when people are like, okay, yes, I'm going to buy into this now. So they're actually proving to the community that I can add value. And then the other part to that is, allowing the community to contribute. So I think the structure of a DAO, for example, is that the community are the contributors to the success of the project. So they actually are given the opportunity to make an impact. And I think we'll probably start seeing a bit more of that as well, where the community members are actually getting really involved and working on certain projects within that particular DAO or NFT community as well.
Feels like a lot of the lean startup principles still apply in this space in terms of, talking to your customers, engaging them first, building an MVP before you're kind of asking for cash. That might be a common thread there as well. And is the sentiment generally good in the communities that you're still part of today, or have they been kind of rocked by the state of the market as well?
Yeah, they definitely have been rocked. I think some communities are a lot quieter than others. And like I mentioned before, it's just the communities that still have that sense of belonging. And the other, for example, like other women are empowering other women to just still stick around and be part of it. And I think that's what's still keeping people engaged in the communities that I'm in.
I'll take one more question from the audience. essentially, it's actually not on screen anymore, but it was, what do you think the biggest challenges for Web3 will be over the next 5 years? Maybe Stefan?
The biggest challenge by far is for this to go mainstream, people have to understand it, or it has to be abstracted away. I'm sorry, I don't believe that Web3 gobbledygook jargon, I don't think it's ever going to go mainstream in its current state. There's just no way. I mean, if you try to tell your parents like what Web3 is, I mean, it's like, it's comical, all right? So I think that the best way for this technology, which by the way is not going away at all, it is going to be here despite the downturn. It's going to be here forever. Okay, so let's understand it. Let's figure out how to get people on board on it. The way to get people on board is to abstract away all the noise. The perfect example of this is what Reddit recently did. So Reddit essentially onboarded 1.5 million people into Web3 without them even knowing. And the way they did this was through their collectible avatars. So every Reddit user now can buy an avatar. It's actually vaulted and it's actually an NFT, but most people don't even know or care. So they've abstracted away all that garbage, all the noise, all the buzzwords, and all the hype, and they're just left with the underlying technology. And I think that's what we need for this to have a chance at going mainstream.
Daniel, did you have any thoughts on that?
I totally agree with Stefan. Like, I think for NFTs to succeed, people need to no longer think about NFTs.
Right.
Like, it's just a technology that enables a digital economy.
Yeah.
And for that to succeed as well, I think there needs to be a lot more trust, and people need to feel safe to enter. So I think just user experience and trust are the biggest problems. You need to be able to find something that you value, and people need to actually create things of value so people continue to care about them. But I think that will get there with all the investment and innovation that's going on. But yeah, we need a way to cut through the noise and feel safe. And then.
So with all that in mind, I guess we're still looking for this killer app of Web3. Like, what is the thing that's going to take us mainstream? And there's been kind of a binary conversation going on around, it's status. Status is what matters. Wealth is what matters. How do we flip up and kind of flip out of these projects? And then on the other side, you have this kind of notion of belonging, community, finding people to connect with at a really niche level. And the price of something matters so much less than the fact that you're part of a group of people that really understand you. So, if you don't like Bored Apes and you've, found your people in Sad Girls Bar, then you don't care how low the bar is. You're just happy to be in that community. For each of you, what do you think that killer app of Web3 is? Status or belonging? Megha?
The killer is in...
the one that's going to take this, that's actually going to be the resilient
belonging,
factor.
Definitely.
Yeah. And what does that mean to you?
Yeah, so I think just in terms of the projects that I'm part of right now, I feel like that I can talk to them openly about whatever I want. I don't even have to say who I am, but it's just being so comfortable within each of those communities, where sometimes you don't get that in real life necessarily. Like if you talk to some friends about NFTs, they'll just be like, oh, it's a scam. So you get that feeling just immediately by being part of those communities.
And Daniel, can this succeed if we don't get the economics right and it doesn't actually become valuable at the same time? Can this just be community and goodwill?
No. No, I think for it to continue to have value, you need to be creating value for people. You need product market fit. People need to come for a reason. They're not just going to stay for the vibes. You can stay for the vibes without spending all your money.
Yes, yeah. And Stefan, what's your thought?
Yeah, I think utility is definitely a buzzword, but it matters a lot. And to bring it back to vinyl records one last time, I think I look at some of my records in my collection, and I've paid a lot for them. I don't particularly like them at all. Like, I have an original Eagles Hotel California pressing. Like, I don't like the Eagles, but other people do. So, I have that in my collection. And there's also some in my collection that I bought $10 in a bargain bin, and I play these records every couple of days. And so, I think price is what you pay for, value is what you get. The value is what matters the most, absolutely.
Yeah. Well, with that note, I think what we can all agree is valuable is this kind of human connection and an opportunity to kind of dive deep on these topics with each other. So thanks to the Sunrise team for giving us this opportunity. And thank you again to my incredible panelists, Stefan von Imhof of Alts, Web3 investor and community builder Megha Tripathi, and Daniel Bertram from Rarity Punks. And thanks to all of you for joining us here today for this conversation. Cheers.